understanding appraisals and private money lending. Hey everyone, I'm Milton's AI avatar at DreamPoint Capital Miami. And if you're a real estate investor working with private capital, today's topic is one you need to understand. Specifically, why in the private lending world, appraisals must go through an appraisal management company or AMC, and why that affects your cost. Welcome back. Let's start with the basics. An AMC, appraisal management company, is essentially a middleman between the lender and the appraiser. Now, I know what you might be thinking. Why do we need a middleman? Isn't that just adding costs? Well, that's a fair question, and I'm going to break it all down for you. But here's the short answer. It's not just about cost. It's about protection, your protection, my protection, and the integrity of the deal, because just about every private money mortgage lender is required by law to order appraisals through an AMC. This isn't optional. It's federal regulation put in place after the 2008 financial crisis to prevent appraisal fraud and conflicts of interest. Why AMCs exist. The why behind the rule. Before AMCs were mandated, lenders could directly influence appraisers. Imagine a scenario where a lender pressures an appraiser to hit the number on a deal, inflating a property's value to close a loan. That's exactly what happened leading up to the housing crash. The Dodd-Frank Act, Itandi stepped in and said that no more direct communication between lenders and appraisers. So an independent AMC had to manage that process to ensure objectivity and accuracy. So when I tell you your appraisal must go through an AMC, I'm not making your life harder. I'm protecting the legitimacy of your loan and your investment. Let's talk about your appraisal options in private lending. Let's talk about the actual appraisal products available to you as a private capital borrower. This is where it gets really practical. The first is the full appraisal, also known as the 1004 appraisal. This is the gold standard. A licensed appraiser physically visits the property, evaluates its condition, compares it to similar sold properties, comp, and delivers a detailed report. This is the most thorough and, yes, the most expensive option. When do you need it? For larger loan amounts, unique properties, or when the lender requires maximum confidence and value. 1004D appraisal update and or completion report used after an original appraisal has been completed. It serves two purposes. Update an existing appraisal when time has passed and the lender needs confirmation that value hasn't declined. Completion report to confirm that required repairs or improvements noted in the original appraisal have been finished. Desktop appraisal, no physical visit required, but the appraiser uses public records, MLS data, and available photos to determine the value remotely. It's faster and more affordable, but it's not available for every property type or loan scenario. Best for properties in data-rich markets with clear comparable sales. Now, the 1007, this one is specifically for investors. If you're buying a property as a rental, the lender doesn't just want to know what it's worth. They want to know what it can earn. The 1007 is a comparable rent schedule. The appraiser looks at similar properties in the area and estimates what your property could realistically rent for on the open market monthly. Why does this matter? Because lenders are going to use that rental income number when they're deciding whether your deal makes sense. It directly impacts how they underwrite the loan. So if you're buying a single family rental or a condo as an investment, expect to see 1007 alongside your appraisal. This is where the appraiser views the exterior of the property but does not enter. Another option is the drive-by appraisal, exterior only. This is best for lower loan amounts or when interior condition is well documented. Combined with available data, they form a value opinion that's lower cost and faster turnaround. Next is the broker price opinion, or BPO. Not a traditional appraisal, but sometimes acceptable in certain private lending scenarios. A licensed real estate agent or broker provides an opinion of value based on market data. Heads up, not all lenders accept BPOs. Always confirm with your lending team first. So, why does it cost more through an AMC? Here's the honest conversation about cost, because I know this comes up often. When you order an appraisal through an AMC, you're not just paying the appraiser, you're also paying for AMC management fees, their administrative overhead, compliance monitoring, and quality control. Appraiser independence. The AMC vets and selects qualified appraisers in your market, turnaround guarantees. With the AMC holds the appraiser accountable for timelines, dispute resolution. If you disagree with the value, the AMC manages the reconsideration process. Yes, it costs more than calling your buddy who happens to be an appraiser. But here's the thing, so that shortcut can kill your deal, trigger regulatory issues, or worse, put your investment at risk. Think of the AMC fee not as an added cost. Think of it as an insurance premium on the integrity of your transaction. Now, let's have a real talk about how this affects your deal timeline. I want to be transparent with you because I think that's what builds trust. And AMC appraisals do take a little longer than a direct order appraisal would, but typically you're looking at 5-10 business days for scheduling and completion, sometimes longer in rural areas or during high demand periods. And there are options to rush and get them done in 3 days. My advice, order your appraisal early. Don't wait until you're under the gun. Make sure the property is accessible for the appraiser. Provide any relevant documentation, permits, renovation costs, rental income upfront to support the value. Communicate with your lending team if you have concerns about value before the appraiser visits. The more prepared you are, the smoother this process goes. Why this matters more in private lending. Here's something a lot of investors don't realize. These private capital lenders face even stricter scrutiny when it comes to appraisal independence. Why? Because private lenders don't always have the same regulatory backstops as traditional banks. To maintain credibility, protect investors, and ensure loan quality, going through an AMC isn't just legally required, it's a signal of a reputable, trustworthy lender. When you work with us, you can be confident that every valuation is unbiased, third party verified, and legally compliant. That protects you just as much as it protects us. So here's the bottom line. AMCs exist to protect everyone in the transaction. There are multiple appraisal options depending on your deal. The cost reflects the compliance, independence, and protection built into the process. In private lending, going through an AMC is non negotiable, and that's a good thing. If you have questions about which appraisal option is right for your next deal, reach out to our team, HRE at DreamPoint Capital. We're here to make this process as smooth and transparent as possible. Thanks for watching. And as always, let's build wealth the right way. DM to connect.